Hello everyone, in this video, I want to explain about labor as the factor of production. Factors of production is an economic term describing the general inputs used to produce goods or services to make a profit. Factor of production define resources used to produce or create finished goods and services, the sale and the purchase of which keeps the market economy afloat. Determining these factors ensures efficient production and successful completion of project and purchase orders. Under the classical view of economy, the factors of production consist of labor, land, capital, and entrepreneurship. But in this video, we will focus to analyze by examining the demand for labor. Labor is the most important factor of production because workers receive most of the total income earned economy. So guys, when you finish your school, your income will be determined largely by what kind of job you take. If you become a computer programmer, you will earn more than if you become a gas station attendant. This fact is not surprising, but it is not obvious why it is true. No law requires that computer programmers be paid more than gas station attendants. No ethical principles say that programmers are more deserving. What then determines which job will pay you the higher wage? Your income, of course. It is the small piece of a larger economic picture. People earn money in different ways. So why do computer programmers earn more than gas station attendants? At the end of this video, we will know the answer. So, let's take a good look at the next explanation. Labor as a factor of production refers to the effort that individuals exert when they produce a good or service. Labor itself includes all types of labor performed for an economic reward, such as mental and physical exertion. The value of labor also depends on human capital, which is determined by the individual skills, training, education, and productivity. Productivity is measured by the amount of output someone can produce in each hour of work. The income that comes from labor is referred to as wages. Note that work performed by an individual purely for his or her personal interest is not considered to be labor in economic context. The following are several characteristics of labor in terms of being a factor of production. First, labor is considered to be heterogeneous, which refers to the idea of how the efficiency of work are different for each person. It differs because it depends on an individual's unique skill, knowledge, motivation, work environment, and work satisfaction. Additionally, labor is also perishable in nature, which means that labor cannot be stored or saved up. If an employee does not work shift today, the time that is lost today cannot be recovered by working another day. Also, another characteristic of labor is that strongly associated with human efforts. It means that there are factors that play an important role in labor, such as the flexibility of work schedule, fair treatment of employees, and safe working conditions. Now, let's talk about demand of labor. Labor market is like other markets in the economy, are governed by the forces of supply and demand. As we have already noted, labor markets are different from most other markets because labor demand is derived demand. Most labor services, rather than being final goods, ready to be enjoyed by consumers, are inputs into the production of other goods. To understand labor demand, we need to focus on the firms that hire the labor and use it to produce goods for sale. By examining the link between the production of goods and demand for labor to make those goods, we gain insight into the determination of equilibrium wages. As we all know about these curves is talking about perspective. We can see in panel A, demand is the customer's perspective. The higher the price of the apple, the lower people want to buy apple. And supply is the supplier perspective. The higher the price of the apple, the higher people or supplier want to sell apple. We also can apply it on supply and demand of apple pickers. In panel B, demand is the firm's or company's perspective. The higher the wage of the apple pickers, the lower the firms want to hire apple pickers, because the firms consider the cost and will decrease their profit. And supply is the people perspective outside the firms. The higher the wage of apple pickers, the higher people offer themselves to be apple pickers. This table is an example of how the competitive firm decide and how much labor to hire. As we can see, if we don't have any worker, then we don't produce any apple. But if we have one worker, it can produce 100 bushels of apple. The marginal product of labor between 0 worker and 1 worker is 100. The value of the marginal product of labor is with the assumption of the price of 1 bushel apple is $10. So 100 multiplied by $10 equals $1,000. And the wage for 1 worker is $500. So with the revenue $1,000 minus the expense $500, which is the wage for the worker, the profit is $500. Next, if we have 2 workers, it can produce 180 bushels of apple. The marginal product of labor between 1 worker and 2 workers is 80. The value, the marginal product of labor, is with assumption of the price of 1 bushel of apple is $10. So 80 multiplied by $10 equals $800. And the wages for 1 worker is $500. So with the revenue $800 minus the expense $500, which is the wage for the worker, the profit is $300, and so on. But in the last row that we can see on this table, if we have 5 workers, the quantity is increased to 300 bushels of apple. The marginal product of labor between 4 workers and 5 workers is 20. And the value of the marginal product of labor is with the assumption of the price of 1 bushel of apple is $10. So 20 multiplied by $10 equals $200. And the wage for 1 worker is $500. So with the revenue $200 minus the expense $500, which is the wage for the workers, the marginal profit will be minus $300. As we all can see, the more apple pickers that have been hired, the lower the profit for the firm. That's why the firm don't want to hire more apple pickers because it will decrease the firm profits. And here's news about PT Ramayana Lestari Sentosa, which is a department of store operator. Its main activities are general trading companies that sell various goods such as clothing, accessories, bags, shoes, cosmetics, and daily necessities products. The firm made decision for termination of their employees and cut employee salaries for about 50% of their salaries at May 2020. Now let's see their statement of cash flows between 2019 and 2020. And here's the statement of cash flows from PT Ramayana Lestari Sentosa. If we analyze their cash flows in operational activities, in 2019, before termination of employees, they paid salaries for 664,017, and after termination in 2020, they only paid salaries for 441,028. Now, we move to statement of profit or loss and the other comprehensive income of PT Ramayana Lestari Sentosa. Why they terminate their employees is because their sales revenue is decreased from 5,596,398 to 2,527,951. So they made a decision to terminate their employees and cut 50% of their employee salaries, so the salaries expense wouldn't reduce much more their revenue to get a better profit. Now we move to the last part of this video. Conclusion. This video explains how labor and the amount paid to each factor of production depends on the supply and demand for that factor. The demand, in turn, depends on that particular factor's marginal productivity. In equilibrium, each factor of production earns the value of its marginal contribution to the production of goods and services. At this point, we can answer the question that began this video. Why are the computer programmers paid more than gas station attendants? It is because programmers can produce a good or greater market value than gas station attendants. People are willing to pay dearly for a good computer game, but they are willing to pay little to have their gas pumped and their windshield washed. The wages of these workers reflect the market prices of the good they produce. If people suddenly got tired of using computers and decided to spend more time driving, the prices of these goods would change, and so would the equilibrium wage of these two groups of workers. Okay guys, that's all for our topic in this video. Thanks for watching, and I hope this video can be useful for you.